What is up, everyone? Dalton Grados with Grados Capital here for the weekly newsletter for the upcoming week of July 29th, 2024. And last week's newsletter, it was kind of late at night, getting close to my bedtime, so it was a little bit low energy. But I think still got the information across. So today's a little bit earlier, so hopefully we'll be able to get a informative and pleasurable newsletter out to you guys. So first of all, this is a good time to remind you guys that all of this is just my personal opinions. So they do not reflect any opinions of any firms that I may work for or be associated with. And of course, it's only opinions. I make no recommendations to buy or sell stocks or anything. I make no recommendations or give no advice at all. So let's dive into it. First, I have pulled up the weekly charts of both the ES and the NQ. All right, weekly charts meaning each one of these candles is a full week. And what we have here, I put the ES on the left side, the NQ on the right side, to kind of compare. Last week we talked about relative weakness in the NQs, how the ES, the S&P was showing a bit more stability, but to look at the NQs for continued weakness. And we got that last week. We got quite a bit of action to the downside last week, led by the NQs. If you don't know, the NQ is primarily your big tech companies. So we were looking at last week's newsletter, identified levels to look at to break to the downside. We broke those levels. So I zoomed out to the weekly chart here to show the high time frame context because, we've had, if we look at, both kind of correlate, but if we look at the S&P over here to the left, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 weeks with hardly any pullbacks in the market. I believe the markets, the ES pulled back a little over 2% over the past couple weeks. We have gone 12 weeks, same with the NQ, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, nearly 13 here actually, weeks where we haven't gotten a meaningful pullback. And a meaningful pullback, by the way, could still go a lot further down. And I want to highlight this point because I'm about to say that I think long-term this is a buy here. I think this is a gift from the market. Finally we got some downside. So if I'm a long-term player, I am buying this pullback. Again, it's not a recommendation, only my opinion. But for the long term, I see this pullback as a gift to buy. Because I personally am bullish going into the election, going into next year. If you are bearish, if you think the next president, whatever side it is going to ruin the economy and things are going to go down, then that's your opinion. My opinion is I see this pullback as a buy. So that is my overall outlook. What I was going to say before that, though, what I was going to say before that statement was a meaningful pullback can still go down a lot more. We've only pulled back what is this? So 5700s to 5500s. So that's like 200 points out of 5700. 200. I got my calculator here. 200 divided by 5700. Okay, we've had a 3.5% pullback in the market. So that's pretty good, in my opinion. A meaningful pullback could still go to 5 and even 10%. So we could still come down a good amount. Oh, look, market just opened for the Sunday session. So we're getting that little new candle here. My point is, we can go down a little bit more, and in my view, it would still be a buyable pullback. A 5 to 10% drop is very buyable in the long term and for the long-term traders. And I can tell you firsthand that a lot of long-term players, a lot of people with their big retirement accounts and things like that, professional portfolio managers would love to buy a 5 to 10% correction. And we're only at 3.5% now. Point being is I like this pullback for a buy, but if you buy, don't expect it to necessarily go straight up right after you buy. Okay, it could still pull back a bit more. So that's all I want to say. All right. So looking into, let's zoom down to the daily. And we'll go to daily on both ES and NQ here. All right. So here on the daily, we've sort of come to the bottom of this, the top of this gap here on ES. Here, let me get rid of that VWAP so we can see a little bit clearer. We've sort of come to the top of this gap on the ES. On the NQs, over here, we've actually filled a little gap here. So this, I'm talking about this gap here, so where my mouse is. We've actually filled that gap on the NQs. ES can still come down more. So again, I would look going into this week for day trading, for shorter time frame trading. I would look for, my bias is basically balancing to positive. I think based on last week's considerable drop down, that this week we could experience some balancing, especially Monday and Tuesday, because it's a Fed week. We have the Fed on Wednesday, which we'll get into in a bit. So I would expect some balancing action. I don't expect a continued drop off the cliff. I would expect a little bit of recovery from last week's action. And then if it wants to go lower, it can go lower, but I would expect it to take a little bit of a breather this week. Now, getting into what I was just saying about the Fed. So let's look at our fundamentals. All right. So this week we have, Monday, nothing. Tuesday, we got some JOLTS job openings. The CPI is for Australia. That doesn't affect us. Wednesday is our big day. We have the federal funds rate and FOMC statement and FOMC press conference. That is when Jay Powell will be giving this press conference. They're going to release the Fed funds rate. It's expected to be 5.5%, so no changes are expected. If we get what we're expecting, that's neutral or positive. If we get a hike, that would be super negative. I don't think that's going to happen, but it would be super negative if it did. And what people are going to be looking for in this press conference, it's funny. If you actually watch these press conferences with Jay Powell, Jerome Powell is the person I'm speaking of, if you're not familiar. It's basically all of these interviewers or these journalists are just basically begging him for rate cuts the whole time, and they're trying to pry something out of him that would hint at rate cuts. And it's kind of funny because it's Jerome Powell is just it's almost like he's trying to answer the questions of a kindergarten class, because they just keep bugging him over the same thing, and it's kind of funny. But anyway, so if you want to watch the press conference, if he gives any hints of we might be cutting it in the fall or in the winter, that's super bullish. So it's Fed week. So basically how these weeks play out, again, like I said, Monday, Tuesday, pretty choppy, balancing action. Wednesday's Fed day, kind of all over the place. And then Thursday, Friday kind of balances out, whether we're going to continue to the upside, whether this 3.5% pullback is going to be it. We could continue to the upside if we get super good Fed news. Or, Thursday and Friday will kind of tell us more about where we're going to head long term in the market. As far as we could balance out a little bit earlier half of the week, depending on Fed and things like that, and earnings, we could maybe continue to head lower. Like I said, around that 5 to 10% pullback mark. We'll see that more on Thursday or Friday this week. Which brings me to my earnings calendar, because in addition to Fed week, we also have some big earnings. All right. So this list, I've filtered it. So this is not all of the earnings. This is just the most important earnings. McDonald's and Welltower. So the top ones on the list here are going to be the biggest companies by market cap. So I'm mainly looking at like the top two or three per day. We have Microsoft reporting earnings. So any of these big tech companies are the ones that to watch out for, especially in the Nasdaq. Remember that Nasdaq is going to pull the whole market. That's your big tech companies. Sorry, I'm going to get this survey out of the way. Okay. All right. So, geez, they really blast you with ads on this page. Okay. So Microsoft, we have Tuesday. Be watching out for that. Wednesday, we have Meta. So again, a lot of big tech earnings this week. Meta. MasterCard is also a big one. Qualcomm is also a pretty big one. Boeing. Ooh, Boeing earnings is also pretty big for the Dow Jones. Not a tech company, but a big industrial company. Basically, most of the Dow Jones is pulled by Boeing. Not most technically, but I think it's like 20 to 30%. It's a large portion of the Dow is Boeing. So that'll be good to watch out for. Thursday, we have Apple and Amazon and Intel. Big day Thursday, right? Um, and then Friday, we have big oil, ExxonMobil, Chevron. So big week ahead. We got Fed on Wednesday, and we got all these big earnings, right? So big for the market, I would say. Also, as far as the charts go, purely on a chart basis, I would expect some balance here, right? And we've got all of these events happening that the market is that are going to move the market. Big tech earnings and the Fed. So I think the best forecast for this week is neutral, and we're going to see where the market wants to take us. On the weekly chart, like we mentioned, it looks like a great viable pullback. But all of this data coming in this week is going to tell us, is the market going to head more towards that 5 to 10% correction number? Or are we going to rip up from here? We will see this week. And I will see you guys next week. This is Dalton Grados with Grados Capital. Like, comment, and subscribe to the YouTube channel. And of course, if you're not already subscribed to the newsletter, you basically get these delivered to your email inbox every week. You can subscribe to that. First link in the description. It's totally free. Sometimes I'll do a video like this. Sometimes I'll send it just in a written email, so you don't want to miss that if it's in a written form. And I'll see you guys next time. Thanks so much.